Today, we will talk about how to withdraw Roth IRA contributions. Let's have a look at the details. A Roth IRA is subject to special rules that do not apply to other types of retirement accounts. Once you open a Roth IRA, you may be able to make contributions into the account up to a certain limit. When you want to take money out of your Roth IRA, you need to understand the federal tax consequences of doing so. Once you have calculated your potential tax liability for making a distribution, you can withdraw funds from your Roth IRA if you would like. The first part is contributing to your Roth IRA. Open a Roth IRA. You can open a Roth IRA at any point in your life. To be a Roth IRA, the account must be designated with the word Roth. To open one, contact a number of brokers or financial advisors and ask about your options. Look for Roth IRAs that do not include any opening fees or maintenance fees. Shop around to find the best deal. Determine your eligibility to contribute to a Roth IRA. To contribute to a Roth IRA, you must have taxable compensation, like income, and your modified adjusted gross income, MAGI, must be below a certain threshold. Taxable compensation includes, among other things, wages, salaries, tips, professional fees, bonuses, commissions, and self-employment income. If your MAGI is above the limits set out by the Internal Revenue Service, IRS, you are not eligible to contribute to a Roth IRA at all. Calculate how much you can contribute. If you are eligible to contribute to a Roth IRA, you can only contribute a limited amount. Generally, you will be able to contribute the lesser of $5,500 or your total taxable compensation in 1 year. Avoid contributing too much. If you contribute more than your allowable limit in any one tax year, the excess contributions will be subject to a 6% excise tax. Understand how contributions are taxed. Roth IRA contributions are not taxed when you contribute them to your Roth IRA. However, because any amount you contribute comes out of your taxable compensation, your contributions will always come from post-tax income. The second part is calculating your federal tax liability on distributions. Make qualified distributions whenever possible. One of the most attractive characteristics of a Roth IRA is that a number of distributions are tax-free. However, there are limits to that rule. To have a qualified distribution, it first must have been 5 years since you opened the Roth IRA and made an initial contribution. You must be at least 59.5 years old when you make the distribution. Or, use the distribution to buy or rebuild your first home. Or, you must be disabled. Find IRS Form 8606. In order to calculate the taxable part of your IRA distributions, you will need IRS Form 8606. This form is titled Non-Deductible IRAs. Enter your total non-qualified distributions in line 19. Be sure you include qualified first-time homebuyer distributions as well. Enter any qualified first-time homebuyer expenses in line 20. So long as you made a contribution to your Roth IRA between 1998 and 2010, enter the amount of any qualified expenses. However, these expenses cannot exceed $10,000. Subtract line 20 from line 19 and put that number in line 21. If this amount is 0 or less, simply put 0. Enter your basis in Roth IRA contributions in line 22. This line will equal the amount of all your Roth IRA contributions adjusted for any recharacterizations. Subtract line 22 from line 21 and place that number in line 23. Calculate your federal tax liability for non-qualified distributions. In general, you are taxed 10% for these distributions. The third part is withdrawing contributions. Determine how much you have contributed. Check your Roth IRA online, by phone, or by looking at the last statement you received in the mail. Call your broker or financial advisor. Each financial institution will have a different process for withdrawing money. If you have a financial advisor you work with on all of your accounts, call that person and let him or her know that you would like to take some money out of your Roth IRA. Choose how much money you would like to withdraw. Think about what you need the money for, and whether you want to take out all the funds you have contributed, or just a portion of them. Due to yearly contribution limits, you may not be able to immediately replace the money you take out. Instruct the brokerage or financial institution on how to pay you. Once you have worked out your budget and determined your needs, let the bank know how much you will be taking out, and how you would like to receive the funds. Keep all records and documents for tax purposes. Withdrawing your contributions from a Roth IRA will not result in any taxes or penalties. Hold receipts, records, and correspondence from this transaction, in case there are errors during tax time. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.